Hey, everybody. Good morning. Glad to see you here. Happy Tuesday. Is it Tuesday, Tobias? Say it in my. It is Tuesday. Okay. God. Good to have everybody in. Beautiful day here in Florida. It's going to be like 105 degrees. If anybody has a longboard want to sell me, my daughter busted two of the fins on that surfboard behind me. So I'm out on eBay right now shopping for a nice longboard. It needs to be at least 6'4" or longer because I live in Florida, everybody. And yes, two more shark sightings at the beach. So just a normal day in Florida. Everybody, looks like we got a good crowd in here. Make sure you grab your coffee and let's jump in. Good morning, everybody. Welcome to the 62nd episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, 11 Investments Managing Director, North America, and I'm your host. Please let us know where you're at in the world. Put it in the comments. We'll give you a shout out. Love having the international audience. Also, make sure you share this. So look down at the bottom. You see that little link that says share. Click on that. That'll go out to your network and let them know that you're watching the show, because today's going to be a lot of fun. And smack any of those emojis. Pick one you like. Just keep smacking that thing. And follow us if you want to on 11FS here on LinkedIn, and also our FinTech Insider podcast on whatever podcast listening services you use. If you haven't read our latest research report yet that we did with Plaid, that I push every single day on the show, I don't know what's wrong with you. So for the love of God, read our research report that we did with Plaid about how open finance will shape the industry. Bianca, we'll put a link out for you in the comment section, or you can go to bit.ly/Open Finance 2020. So first off, 3 news stories from the past 24 hours that caught my attention and should catch yours. And man, I had to narrow these down because there were so many. But the first one I absolutely love. You guys, hold on for this one. Forbes reports exercise startup Mirror agreed to sell to Lululemon, the yoga clothing brand, for $500 million yesterday. Why am I leading with the story? Because if you remember, we had Lowell Putman on last week, the guy who had co-founded Quovo, which sold to Plaid, and he heads up partnerships at Plaid. And I kept telling everybody how Lowell was so much more boring than his wife, Bryn, because she was the co-founder of Mirror. And I want to give Lowell credit. He must be the best poker player ever, because he didn't say jack shit about this acquisition that was coming. So Lowell, man, you owe me some serious drinks next time I'm in New York. Former ballerina Bryn Putnam founded New York City-based Mirror, which offers a roughly $500 interactive mirrors on which you take exercise classes at home. Even before the coronavirus pandemic closed, it had been growing fast. One of 25 companies to make the cut for this year's Forbes Next Billion-Dollar Startups. Its revenue reached an estimated $45 million last year. It was on track to surge past $100 million this year. Folks, that's what you call growth. It's also a fascinating move because you got Lululemon buying this, who's a yoga clothing company, and not Nike, not Peloton, who I would have sworn Peloton would have been the one to buy them. A $500 million exit. One, a great deal for Lululemon, a great deal for the Putman family, and damn, Lowell, you owe me one. Another story in Forbes that was interesting yesterday was Personal Capital, the San Francisco fintech that lets people invest in automated portfolios of stocks and bonds, is being bought by Empower Retirement for $825 million upfront, plus another $175 million if growth goals are reached over 2 years. Personal Capital was last valued at $950 million in a February 2019 fundraise, according to PitchBook. Former Intuit CEO Bill Harris founded Personal Capital in 2009. Jay Shah joined the same year and became CEO in 2017. Denver-based Empower is the second largest administrator of retirement investments in the U.S. after Fidelity. So it has $656 billion in assets as a subsidiary of Canadian insurance giant Great-West Lifeco. Personal Capital automates investing for retail investors and registered investor advisors, or RIAs. Its customers can speak with dedicated financial advisors often as they would like. That's why Personal Capital shuns the label robo-advisor that is otherwise embraced by fintechs like Betterment and Wealthfront. With the purchase, Empower aims to increase engagement among its base of 9.7 million customers and add new clients. So well done for that team. And finally, MSNBC reports U.S. food delivery service Postmates has received acquisition offers from Uber and a special purpose acquisition company as it simultaneously make plans to go public, according to people familiar with the deal. Postmates hasn't decided which path it's going to take, although it's expected to make a decision in the next few days. Uber's offer is valued at about $2.6 billion, according to the Wall Street Journal. Postmates is working with JP Morgan Chase as a financial advisor, the people said. Why I like this move, if Uber is able to pull it off, it's because basically you're building an ecosystem. an ecosystem that you own, both vertical and horizontal. My favorite kind of plays. Essentially, what you're doing is creating a super app. That is the best segue I think I've done, at least in the past 24 hours. So with that little segue, let's bring in our guest. We're super excited to be joined by Oliver Hughes, CEO of Tinkoff. On today's show, we'll be looking at how Tinkoff evolved from a branchless credit card into a super app, hence my segue, and how offering lifestyle advice can enhance profitability. Oliver, how are you?
Very good indeed, thanks, Sam. Thanks for having me on the show.
And let's get this, let's go ahead and state this. What part of the world are you in right now, Oliver?
Just outside Moscow right now.
So what type of Russian accent would that be, Oliver?
This would be a Lancashire version of the northern Moscow accent.
So if I was a talent scout, a casting scout for a movie, and I wanted to come up with the head of a Russian bank, you would be the last person. I'm just going to say it with that accent that I would have picked. But I think what's going to be really interesting for our audience is to find out how massive of a scene Russia is and Moscow is when it comes to fintech. As a matter of fact, I read this just over the weekend. Penetration of fintech services in Russia is among the world's highest. I believe it's the third highest. Over 80% of the population use services, with money transfers and payments being the most popular form of them. So by raise of hands, everybody, how many people knew that? You're lying. Oliver knew it. So Oliver, if you don't mind, kind of walk us through, how did you go from Lancaster to Moscow to running Tinkoff Bank?
Sure. So a brief potted history then. I basically did a Russian degree. I was a historian into politics, and I lived in the Soviet Union just before it collapsed. I then had various jobs in various industries and eventually wound up in Visa. Visa decided to open an office in Moscow in 2000 and asked me to come out and open it. I worked for Visa for about 10 years, which was a fantastic opportunity, great time. Worked my way up to basically head of Russia, and then was poached by Tinkoff. So Tinkoff is a person, Oleg Tinkoff, who's a kind of Russia's answer to Richard Branson. He decided to start up a branchless bank, and much more than that. And basically invited me to go over when I was pitching for business against MasterCard. So I moved over in 2007. I've been in Russia for 20 years this time around, so I've been here before a few times, and I've been loving every minute of it. So my accent is still Northern English, which is good. And Northern English people, when they listen to me speaking Russian, if they know Russian themselves, can detect a Northern English accent, which fills me with endless pleasure.
So, man, here's what I love, Oliver. We haven't even started yet. I told you the people that watch this and engage with this really know their stuff. So Dan over at the London Fintech Frictionless Seamless Association already throughout this, he said, please discuss Vivid Money. You got to love the love, dude. So go ahead, Oliver. Talk about, if you don't mind.
So we're the investor that is backing a project called Vivid. So initially it'll be part of Tinkoff Group. It's our first move outside of Russia, because we have a big business in Russia. We're one of the biggest financial players, and beyond finance, we've got 11 million customers on our ecosystem, but we've never done anything outside Russia. So a couple of basically early Tinkoff members, very clever guys, have gone off to set up a new European venture, and we're their backers. They launched about 2 weeks ago in Germany. It's called Vivid Money. So it's basically an integrated solution for retail investors who also want an interesting, basically, way of managing their money and spending. So it's a European fintech, unlicensed in the beginning, but obviously over time it will become licensed. And they're just at the start of their journey, so very interesting.
Well, now, if you don't mind, then let's back up. Way to go, Dan. Good question, by the way. Let's talk a little bit about Tinkoff, because I'm going to guess a significant number of folks, at least in the U.S., aren't familiar with Tinkoff, which, by the way, you should be, because you're roughly at, what, 11 million customers right now? I get my numbers right?
Yep, growing very quickly.
Okay, so bigger than pretty much any what we'd call challenger bank in the U.S. You know, you're up there with like a new bank numbers down in Brazil, which I always throw out there as, you know, an example of doing this successfully. So you all have. So can you kind of talk about the bank itself and its history and how you got to where you are today?
Sure, Sam. We obviously know David and the team in Nubank very well. They're our favorite, basically, digital bank or challenger in the world, outside of Russia, obviously. Very good guys. So We started our lives as a company in 2007. We were a branchless credit card monoline at the time. We had a couple of years being this branchless wholesale funded credit card monoline, and then the world changed just a tad during the global financial crisis, and there was no wholesale funding. So we built up lots of experience. We'd actually built up a profitable business. We broke even after about a year and a half of operations, and we moved everything online. The way we did that was by moving to retail deposits. So we built up a deposit-taking business, which funded the credit card business, a bit of a debit card business as well. But basically, we built up a platform, which we realized by the time we got to our IPO when we became public in 2013 that we were underutilizing. So we were selling a few deposits and selling some credit cards. We were second credit card player in Russia by that time, but still we could do a lot more. So we decided to diversify, and we went into all sorts of transactional businesses, SME, built an online insurer, built a huge brokerage business. We're the biggest in Russia now, so you kind of think Robin Hood type affair. All of this inside Tinkoff Group. And we built some brokerage businesses, as in online mortgage broker, for example, that kind of thing, where we're more of a platform for B2B business and partners. And then we went beyond finance. We went into travel. We bought a stake in the largest online ticket operator in Russia. So we've gone into entertainment, content, and various other digital services that are complementary to our business, and laid it on top of our platform. So it's been an interesting journey, but we're just at the start. So we've got 11 million customers. We know how to get it up to 20 million in the next 3 years or so. High growth company, and enjoying it very much.
And can you talk a little bit about this concept of a super app? Because in Asia, pretty common, one that consumers understand and know. Obviously, with what y'all do, send the same concept. In the US, we really don't have too many examples of that, of this concept of a super app. So when we say that term, what do we mean by it?
Sure. So we're kind of in between, yeah. So let's call it Eurasian. So obviously in the Asian markets, in China and Indonesia, Singapore, various other places, taken off big time. So we'll understand what it means now. In, let's call them European and Anglo-Saxon markets, it doesn't exist, or certainly not to scale that I've seen. And in Latin America, they don't seem to be going down that route either.
Yeah.
Russia is the jury's still out of it, and you have to understand a little bit about the shape of the market here. So Russia's quite a walled garden in that we have our own big tech players. So you don't have they're here, but they're not the biggest players. You don't have your Facebooks, right, and Googles, and whatever. And the big tech players are not in finance yet, which is a separate story. The financial players are actually building their own ecosystems. So we started to basically collect a load of non-financial services, what we call lifestyle services, inside our SuperApp. And we basically had a hypothesis that we set out to test, which was, can we change our mobile app, where you've got some fantastic financial services, a very rich mobile app from a financial services perspective, but can we drive more and more MAU and DAU and engagement through our mobile app? Because it's, how many times can you transfer money to mum, check your balance, pay your mobile bill, top up, whatever. So there has to be more in there for people to have reasons to go in there. So we started adding new services. We added content through Tinkoff Stories. We added some entertainment, travel options, stuff that I mentioned earlier. And then added more and more, and basically it became a super app. So if you go into our super app section in the mobile app, you can see, I don't know, probably about 40 categories already. And we're adding categories every few days. So we added e-commerce last week. So it's driving monthly active usage, it's driving daily active users, it's driving the amount of time and the amount of services that they buy. So we're up to about 6-7 million MAU already. So basically it's got good penetration in our customer base, and absolutely motoring. So we proved our hypothesis that it can be done, that you can be a core financial player with lots of usage and services going on around it.
What's that? And again, because I don't know. I mean, I've spent time in Eastern Europe, but it's been a little while now. you talked about the number of customers that you have, and I'm curious, what is it about, and I know we're going to generalize here, but what is it about the typical Russian or consumer that makes them, have this high adoption rate? And is it pretty concentrated? Is this more western part of Russia than say other parts? Because I don't know the landscape that well.
Sure. So it's everywhere.
Okay.
Obviously, the most tech savvy users tend to be in the bigger cities.
Yeah.
But there's some very big cities. So it's not like in the UK where, for me, my city is quite big, 50,000 people. That's just a village to a Russian. Yeah? So you've got 13 cities of 1 million people, and there's dozens of cities of 500,000 people. So it's concentrated in urban areas but spread across Russia. Russians are very tech savvy. They're very well educated. Obviously, the best developers and the tech talent in the world tends to come from Russia. But even if you're not a developer or an engineer or data scientist or whatever, then you tend to be pretty switched on. Mobile penetration is very high, and smartphone penetration is very high. The mobile coverage was very well developed very early, so right at the beginning of the 2000s. It's the largest online population in Europe, more than Germany. So it's got all the prerequisites. And just if you look at any of the numbers, so penetration of mobile finance, contactless payments are, I think it's the biggest market in Europe in terms of transaction numbers. For mobile NFC, mobile contactless, I think I'm right in saying it's the biggest in the world by transaction numbers, and the second after the UK in terms of volume. So, whatever metrics you look at, it's a very well developed market, very sophisticated in terms of financial technologies and technology in general.
Before we went on, Sidharhar, dude, I love you, man. Before we went on, I told Oliver, you're going to get some good questions. And the Sidharhar guy in San Francisco is going to just give you a question. That's great. So I love that he was doing some research here. So here we go, Oliver. Sidharhar asked, so Tinkoff's return on equity is at about 60+%. It's more than 5x larger name brand than U.S. banks, and 2 times Visa is roughly equal to Apple. That's stunning. So, job, Oliver. Is this really because you guys are so much more efficient, or because your SuperApp approach, where you drive profit from non-banking services embedded in the Tinkoff ecosystem?
Sure, great question. Thank you very much indeed for doing a bit of research on us. So we did indeed, we have indeed shown an ROE of north of 50% consistently over the last however many years. 10 years plus. We've been through a few crises as well. Obviously, the ROE dips, but we've always stayed profitable all the way through. So we've gone through this, our third crisis as a relatively young company. So we've been stress tested, as they say. ROEs. So it's a combination of the fact that we are an online company, so we have a very flexible cost model, let's say, business model. We can switch our costs on and off because basically most of them are growth related. So we have no physical infrastructure, no network, because it's all in the cloud. We drive our service through technology. So we've got chatbots, voice assistants, the largest distributed cloud-based call center in Europe, maybe the world, which does servicing, sales, and all sorts of other stuff, fulfillment. So all of this means that we get a lot more bang for our buck. But there's also a philosophical part of this, as well as the fact that we're very entrepreneurial and very lean. We also run our business to NPV. So everything we do is informed by NPV modeling. So baked into that NPV model, there's a 30% hurdle rate. If it doesn't give us at least a 30% return on capital, we don't do it.
Wow.
So that kind of explains why we get this 50%. Over time, it'll come down a little bit because we're getting going to new lending products and that kind of thing with lower yield, but we'll still be a higher ROE company.
Yeah, great question, Sidharhar. I was doing the same when Oliver was talking earlier. I went up and pulled up the stock and was looking at it, and well done writing out what we're going through right now globally with the COVID virus. Dan asked a question about the appetite for open banking in Russia. What's it like right now?
So it's a very interesting question. Incumbent banks that have had a stranglehold on a financial market for basically 100 years, as you have in the UK, and who weren't letting people in. Because it's a relatively young market, it's very dynamic, and Tinkoff's a good example of how you can come up through the ranks. So we're one of the leaders in retail, and I don't know, we're probably top 15 by assets, whatever. It doesn't really matter. We don't look at these numbers, but it just means that you can have challenger banks. We're not the only one who come through in Russia because it's very tightly and very well regulated, but with a very progressive regulator. And actually, one of the biggest disruptors in Russia is the regulator. It sounds a bit weird, but it's true. They built a payment system, P2P transfer system, basically Russia's equivalent of faster payments, which came on stream last year. It's something I've dreamt of for 20 years, and they finally did it, and it's excellent. And that's shaking the market up. They're rolling out QR codes for acquiring to shake up the cards market. And they do all sorts of stuff to make sure that the incumbents or some pseudo-state monopolies who are kind of post-Soviet players, one of them very good, can't basically dominate the market. So open banking is part of that, but I wouldn't really say that we need open banking in the way that's been rolled out in Europe, because it's a very different paradigm.
Yeah.
Challenges.
On another question that I think is interesting, this one's more for me, on the investment brokerage platform, what's the investment scene like in Russia? Because again, I'm not familiar with it. So for, like here in the US, Robinhood, especially during COVID, has made a very nice name for itself, and also had some interesting negative impacts.
Sure.
Our stock market here is, what's a good technical term for this? Bonkers? There you go. I think that translates across the US, Europe, and Russia. It absolutely doesn't make sense at times. What's it like in Russia? So
again, because post-Soviet Russia hasn't been around that long, so it's
right.
50 years. So there's a very underdeveloped capital market from both sides. If you looked at basically the market of 3 years ago, the brokerage business was tiny. There was probably 500,000 brokerage accounts opened. And I would say maybe even less than half of them were active. So if you had any money, it was held abroad in Switzerland or wherever. And if you were low down the pecking order in terms of your money to invest, you put it in a deposit because deposit rates were very high. And then two things came together. Firstly, deposit rates came down, so you couldn't put your rubles in an account for 15%, which we did have not that long ago. They're now 5% for deposit rates. And technology disrupted. So we rolled out a mobile app 3 years ago, and it just blew the market apart. So we brought in over 2 million, almost 2.5 million retail investors who'd never invested in anything in the last basically 2 years. So we completely changed the market, turned it on its head, and this is doing two very good things. So it's increasing access in a very responsible, gradual way. We have a catalogue, so we make sure that we're vetting basically what people are having access to. We've got all sorts of educational tools, and it's slowly, as opposed to getting yourself into difficult situations we saw, unfortunately, in the US recently. On the one hand. On the other hand, it's changing the capital markets. So even in our stock, for example, because we're listed in London, we're also listed on the Moscow Stock Exchange. Our daily turnover has increased significantly as a result of retail investors coming into the market, in large part through our mobile app. And so it's unfreezing, unlocking, if you like, realizing the potential in the capital markets in Russia.
What about I've got to ask this, because again, I don't know a ton, right? I understand how strong the fintech scene is there. What about in the crypto space? Because if there's one thing that has proven to be COVID proof in the US, it is a lot of these crypto companies have actually done really well. So I was wondering what the crypto scene is like, in the space that you're at, and do you all ever look in, over in that space?
I could give an iodine answer, but I'll give it as it is.
Good way to put it.
The central bank doesn't want anybody in Russia to do anything. So we'd love to do it for our customers, part of our brokerage solution. We'd like to have it on our virtual shelf. In the mobile app, but we can't, because if we did, the central bank would pick up the phone and have a stern word with me very quickly.
Yeah, there you go. Well, that answered that one. that was pretty straightforward, Oliver. That'll work. I'm curious from your standpoint, because you talked a little bit about Nubank and how you know the folks down there. I love Nubank too, by the way. Absolutely love what they've been able to do in Brazil. From your perspective, when you look at different markets, which ones, from a geo standpoint, what interests you? Because we talked about Vivid very early on, right? If I remember right, that's looking at the Netherlands and that part. of Europe. So what markets?
Continental Europe. Yeah.
Yeah. So what markets interest you? I mean, if you were to look outside of Russia, right? Where would, and let's say you're going to do some expansion, what markets really interest you?
So Tinkoff is only in Russia, as I said, but we have looked at various markets over the years. We looked at China and realized there's nothing for us to do in China because it's a completely different market and now it's card present. We looked at Nigeria, which is a fantastic market.
It is.
All sorts of huge potential. But for us at the time, it didn't have any retail infrastructure, so it would have been very difficult to get off the ground. We looked at Brazil before Nubank came along, and Nubank came and stole the show and did a fantastic job.
Yeah, they've done all right.
We actually came to Moscow to investigate how to do this before they launched Nubank.
Oh, really?
I hope I'm spoken out of school, but yeah, so we know them very well.
Oh, that's cool. Yeah, I interviewed them. I interviewed both co-founders, several years ago. And it was just fascinating because, folks, if you don't know a lot about Nubank, go read about Nubank, as you should about Tinkoff. But they came out of the banking space. They actually tried to do this within the system, and we're told it won't work. Best way to do that is to get 20 million customers to prove this that they can work.
What do we like about Nubank? We like since we're talking about this, there's kind of like a philosophy. There were European and US startups. We started up fintech, basically a mobile app and a debit card, and said lending is bad, and ran around advertising the fact that not having a banking license is some new virtue. And basically balance sheet businesses in banking are evil, or that's kind of the implication. Now they're all trying to get banking licenses and do a balance sheet business because they can't make any money with the model that they deployed, which is obvious. Nubank went down a very different route from Tinkoff, but with if you like, a similar basic philosophy, which is you have to have a balanced balance sheet approach where you're giving transaction tools as well as lending. and that's what it's about in retail banking, what other guys are finding out. So we like what Nubank do. Anyway, so which other markets do we like? I personally like India. I know it's a very competitive market.
I agree.
It's a laboratory for all sorts of interesting fintech stuff going on, and it's amazing what's happening there.
Massive population, diverse population. Anything
enabled.
Oh God, yeah. Anything on micro lending, right? From the mobile side, I agree with you. I think India is an exciting market.
Big lazy banks that need to be shaken up.
That's a great way to wrap this up. A market with big lazy banks should sound familiar to some of us, wherever we're at in the globe. All right, Sidhar's asked this question, so I'll ask you, Oliver. What's the best place for folks to, one, get in contact with you and learn more about Tinkoff Bank?
So if you look on our site, you'll find tons of information about Tinkoff, a public company. There's the Tinkoff Corona Index, which is on the site as well, which gives you tons of information about Russia based on our huge database of business and consumer. So that'll tell you what's going on right now. All the materials to read, strategy presentations, blah, blah, blah. If you want to get in touch with me, just send a message to ir@tinkoff.ru, which goes through, it's a feed through to the IR team, but I see those as well, so go for it.
There you go, Sidhar. Took care of you. All right, man, thanks for joining. Folks, tomorrow we've got some guy named Tom Peters. So probably anyone who went to school in the US has read one of his damn books and studied it. So we're talking about management consulting books going back to the early 80s. This guy, I love Tom, and one of the easily best-selling management authors and thought leaders over 40 years now. That's amazing when you think about it. I've had the chance to interview Tom before. He is exactly like me. He's old, he's crusty. He likes to swear and he likes to give his opinion. So tomorrow and we're both ex-Navy, by the way. So damn, this should be a lot of fun tomorrow. So make sure you're here tomorrow. Just if you're not familiar with Tom, just Google. I don't know what to tell you. There's more content out there than I've ever seen in my life. Everybody, thanks for joining. Great questions today. Oliver, thanks a lot for being part of this.
Thanks
we'll see you all tomorrow. Yep, thanks.